Hello, everyone, and welcome to the Frontier Views webinar on the 2021 Outlook for Sub-Saharan Africa. I'm Zainab Kasadeh-Sola, Director for Middle East Africa Research. And before we get started, we do realize that some of you may be new to Frontier View, so we'd like to take a minute to provide you with a very quick overview of our firm in the following slides and how we work with executives at major multinational companies. Frontier View provides the world's best market intelligence and advisory services for global business professionals. We help our clients grow and win in their most important markets by informing, empowering the market monitoring, planning, execution, and other critical decision-making processes. And in the following slide, you'll see that with continuous research and insights, custom solutions, and transaction support services, we provide our clients a small sample of which you can see here with timely, actionable insights to adapt and win in changing markets. If you're not a client and are interested in receiving 60-day complimentary access to our Frontier View program, please leave a comment in the chat box or email us at info@beckerfrontier.com. And in the next slide, I think you'll see as part of our offering, we're excited to announce that we have recently launched a new mobile app, Frontier View Mobile, which is available on both iOS and Android, includes all the relevant content you need to monitor markets, including this webinar recording and the presentation deck itself. So we encourage you to download the app to have access to these insights and more at your fingertips. And current clients can access the mobile app using the same login information as our browser application. And if you're not a client, you can still download the app and start monitoring up to 5 complementary countries and access other features like daily news and notifications. So having briefly introduced our company, I'd like to take a moment to introduce our presenter today as well. I'm joined today by Matthew Kindinger, our Associate Practice Leader for Sub-Saharan Africa. Matthew is not only responsible for foreseeing the research from our Sub-Saharan Africa department, but also speaks with high-level executives across sectors on a frequent basis. So he'll be bringing that executive perspective alongside the macro analysis today. If there are any insights you see today as part of the discussion or any questions we don't get to answer, our client services team, Matt and I, will be happy to follow up with you directly. So please leave a comment in the Q&A box on the right. And with that, I'd like to turn things over now to Matt to take us through our agenda.
Great, thank you very much, Zainab. And I'm really looking forward to going through this content today with you on Sub-Saharan Africa's Outlook for 2021. So for today's agenda, there are a few things we'd like to cover in today's hour session. So we're going to be looking at the global and regional drivers for the outlook for Sub-Saharan Africa, and then we'll turn to how this will affect the growth and demand outlook for the region and how multinationals will be affected by this. We'll also spend a bit of time looking at the operating climate in Sub-Saharan Africa in 2021, so getting a sense of how multinationals will be affected by political, security, regulatory developments across the region. And then we will round out by looking at some of the regions in a little bit more detail, Southern Africa, West Africa, and East Africa. And then we'll have a brief session at the end for some Q&A. Fantastic. So we will jump straight in by starting off with some of the priority actions that we recommend business leaders in Sub-Saharan Africa take in order to win in the region in 2021. So the first is to think about which partners, customers, and distributors in the region would or should be prioritized for support, given the difficulties and the challenges that the region faces, both through the end of 2020 and into 2021. The other is looking at your assumptions for 2021. So as we will present over the course of this webinar, the region is facing pretty significant shifts in demand dynamics and the operating environment. And so multinationals really do need to think about how they are allocating resources across the region to ensure that they get return on investment through the end of the year. And the other is to think about scenario planning when developing contingencies to mitigate downside risks for Sub-Saharan Africa. As we know, the world this year in 2020 and SSA has been particularly volatile and unpredictable. And so now more than ever, it's really important to have robust contingency and scenario planning for your region.
It's very important, and I guess, Matt, I was going to also say we can maybe start up with the global drivers when you mentioned the scenarios. There's a lot happening and changing in the world right now. So we're looking forward to the global assumptions that you'll be sharing with us.
Fantastic, yes. So jumping straight in there. So there are sort of four major drivers for the outlook in 2021 for Sub-Saharan Africa, and these can be grouped into two major areas. One is the global drivers affecting the region, and the other is the Sub-Saharan Africa specific or domestic drivers that are affecting the outlook for the region. So in terms of the global drivers, the economic performance of major export partners for SSA markets will be key in terms of driving export demand. And related to this is commodity prices. So commodity prices are key for many Sub-Saharan African markets because many countries are quite commodity dependent. In some markets, we have quite high dependence on a single commodity, whereas in other markets, it's a broader basket of commodities for export and government revenue. So it's very crucial. And then looking at the SSA perspective, the pace at which economies reopen and also the pace at which travel restrictions are lifted and commercial restrictions around COVID are implemented or lifted will affect the outlook for economies in the region. And the other major driver for 2021 will be debt dynamics. And we'll delve a little bit deeper into Sub-Saharan Africa because we are in debt in Sub-Saharan Africa because we are increasingly concerned about debt profiles in SSA. So it's worth starting by looking at some of the global assumptions that we're working with here at Frontier View. So the first is that we do expect to see COVID continue to rage throughout the world over the course of 2021, and we are expecting as a base case to see quite significant fluctuations in cases through H1 in the Northern Hemisphere, so in the major leading economies of the world, Europe, North America especially. And then related to this, we are not expecting to see an effective vaccine that is rolled out globally until the middle of 2021. The timing is obviously subject to confirmation, but the base case view really is that we don't expect a significant change to the course of the pandemic for the next 6 to 12 months really globally. And related to this as well is that we don't expect to see simultaneous shutting down of global economies, so leading economies around the world like we did see in March and April this year with the first wave of coronavirus. We could see sort of ad hoc restrictions in markets like North America and in Asia when cases spike. What I would note, however, is that we are beginning to see stricter, more coordinated rules in Europe. So we are sort of heading towards a bit more of a conservative view when it comes to coronavirus restrictions in Europe, which could affect the global outlook. And so this does relate to scenario planning, as I mentioned a bit earlier. Our base case scenario for Sub-Saharan Africa, which we will go through in a lot of detail throughout this presentation, sees a sort of fairly healthy, although uneven recovery for the region through 2021. But one of the major drivers for the downside scenario for the region would be a significant slowdown in major export partners, export markets, especially in Europe. And this is something we're beginning to see in Europe as a result of new lockdowns that are being implemented. So it is definitely worth taking these risks into account and developing some scenario planning for your business in 2021 in Sub-Saharan Africa. So looking at the global growth outlook, one of the main takeaways is that we are expecting to see all major regions rebound fairly healthily in 2021. So all markets, all major regions across the world, including Sub-Saharan Africa, are expected to experience pretty deep recessions this year, followed by a rebound next year. However, it's worth noting that the rebound in some key export markets will not make up for the loss of growth in 2020. I will pay particular attention here to Western Europe. So a recession in 2020 is unlikely to be met by an equal rebound in 2021. So although this will contribute to growth next year, it does limit the scale of the recovery for the region in 2021. So one of the other major drivers of the outlook for the region is the outlook for commodity prices. So commodities are very important for the region in terms of export revenues, government revenues, forex reserves as well. And one of the major prices or major commodities that affects the region is oil. So some of the markets in Sub-Saharan Africa, some of the largest markets, are really quite dependent on oil for export revenues. And this will definitely have a negative impact on economic performance, export revenues, government revenues in markets like Nigeria, Ghana, Angola, and to a limited extent Cote d'Ivoire and DRC as well. And so this will drag down growth in some of the leading markets. However, there is a bit of nuance to this picture, and that is the fact that leading markets like South Africa and Kenya and Ethiopia actually import oil. So lower oil prices will benefit them in the sense that it will bring down inflation, so that could support consumer sentiment, for example. So a bit of a nuanced picture. But it's worth also looking at other commodities and how they will drive the region's growth outlook in 2021. With the exception of oil, actually most major commodities that are exported from the region, from Sub-Saharan Africa, are actually performing relatively well. We've seen copper slump a bit, but it's now starting to recover because of global supply shortages. And both cocoa and gold, which are quite important commodities or quite important products that are exported from West Africa, are actually above their 2018 levels. So this will provide a bit of a boost, and it will support growth in certain markets looking through to 2021. So quite a sort of a nuanced picture when it comes to the commodity price outlook and the impact for Sub-Saharan Africa. In terms of coronavirus restrictions, so like the rest of the world, Sub-Saharan African markets introduced quite stringent restrictions to contain coronavirus. And we've seen most markets release these restrictions, although some have been quite late to the game in terms of releasing restrictions or lifting restrictions. But we have actually seen quite an uneven opening of economies across Sub-Saharan Africa. And
what is the view there, Matt, in terms of the outlook for these restrictions? We see some coming back in Europe, some countries in Eastern Europe and in Russia trying to decide what to do with these restrictions moving forward. And also in the Middle East, we have different timelines across these markets as well in terms of when they've recently lifted them. What's the view for Sub-Saharan Africa?
Yes, I mean, well, it's a great question because, you know, all eyes are on Europe at the moment. We're seeing new restrictions introduced in the UK as of early November. We're also looking at Germany and France seeing new lockdowns. So when it comes to Sub-Saharan Africa, there are two things to take note. One is that the reopening is very uneven across the region. You can see from this chart or from the slide that Sub-Saharan African markets have taken a very different approach to reopening. So, for example, Ghana has reopened quite rapidly, whereas South Africa, stricter restrictions have lingered, as is the case in Kenya. But looking ahead to 2021, our base case view is that we don't expect countries to reintroduce very severe lockdown restrictions. And this is because governments are quite concerned about the socioeconomic costs associated with these restrictions in Africa. And the other is that actually relative to Europe and North America, Sub-Saharan Africa has managed to escape the worst in terms of deaths and long illness from coronavirus. So the region has actually fared quite well, except for South Africa. So this does mean that governments will be under less pressure to reintroduce commercial restrictions. So a bit of a sort of a bright note for SSA in 2021. So this is quite also good for multinationals, fewer commercial restrictions, stronger demand dynamics going forward. One of the other major drivers of growth in Sub-Saharan Africa or drivers of the outlook or trends that will affect the outlook next year relates to debt. So we were quite concerned about rising debt levels in some markets across Sub-Saharan Africa before the coronavirus pandemic began at the beginning of this year. And what we've seen is that the coronavirus pandemic has actually aggravated these trends. So markets that were seeing rising public debt levels as a result of weaker oil revenues, for example, or governments going on spending and investment binges before the pandemic have really found themselves in a position where debt levels have continued to rise. And as you can see, we've got certain markets like Angola, Zambia, where debt to GDP now exceeds 100%, and markets, fairly significant markets like South Africa, Ghana, where debt to GDP is heading in that direction. So what this means is that governments have fairly limited capacity to stimulate economies again if we were to see another slump. And it also is another factor behind decisions not to reintroduce restrictive lockdowns over the coming months.
Really? So these high levels of debt are going to be restrictive in terms of economic support, you said, Matt, and that's very important as we see across the world, government stepping in to support economies under lockdowns, but then it's a very big question mark to see if there's fiscal room for that. But beyond just being able to support economies, do you see this risk of sovereign debt default, for example? Are we looking at even bigger risks in Sub-Saharan Africa?
Yeah, I mean, this is a great question because most clients we speak to at the moment are, they're seeing these headlines about rising debt levels, and they are quite concerned about what this means for sovereign or fiscal stability in Sub-Saharan Africa. I mean, the short answer is we don't expect there to be mass defaults, and we don't expect a large number of markets to enter debt distress over the coming months. But there is increasing risk that governments will face very acute pressure to cut spending and raise taxes. We have already seen two markets enter default recently. So Mozambique has been in default for a couple of years, but Zambia defaulted a few weeks ago on its debts. Angola is another market to watch, and Ghana is increasingly worrying in terms of its debt to GDP ratio. But looking to 2021, most of these markets will benefit from fairly healthy growth, especially Ghana, Kenya, Cote d'Ivoire, and so we're not expecting them to be unable to service their debts next year. But it's definitely worth monitoring in terms of the risk to public finances and the government's ability to stimulate their economies.
Mm-hmm. Right, and I guess there are clear factors that will be driving the outlook for SSA, both COVID and economic related. So why don't we take a look at the outlook for demand growth in these markets? Let's start with, I believe, just the overall comparison at the economic level. What is the pace of recovery that we're expecting to see in the region?
Great, certainly. So I think it's worth actually looking, before we actually look at the forecasts for 2021 and the pace of recovery, it's probably worth taking a step back and looking at how the region has performed in 2020 so far. So there hasn't been a country in Sub-Saharan Africa that has been unaffected by coronavirus and the global economic slowdown. All the major economies that have published data for Q2 have published slumps or sort of contractions in economic activity. But what's really interesting to note is the depth of the contractions has been very varied across the region. So some of the larger markets, Nigeria, South Africa, Angola, have seen very deep contractions in Q2. South Africa's slump was the steepest on record, and Nigeria's slump in Q2 was the first time the economy has contracted at this rate since 1983. So pretty severe contractions by historical standards. Whereas actually smaller markets have fared fairly, well, I wouldn't say fairly well, but they've actually got off fairly lightly in terms of recessions. So there's actually been quite a sort of spread in terms of, quite a significant variance in the severity of contractions in Q2. And this largely reflects the sort of local economic dynamics, how open these economies are. South Africa, for example, is extremely open to global financial movements, but also it is very export dependent, especially to Europe. and to an extent Asia, so it really has suffered. And in terms of what this has meant for private sector sentiment in the region, so we did see all major economies report very significant reductions in private sector activity and sentiment in April and May, but we've actually seen quite a few markets bounce back quite rapidly. So markets like Kenya, Nigeria, Ghana, they've all reached pre-pandemic levels of business sentiment, which really reflects the reopening of economies and actually quite upbeat outlooks for some of the markets. But in other markets like Zambia and South Africa, we're still really struggling with quite weak sentiment, and this will affect the growth outlook and the prospects for the economic recovery in 2021. So turning to the growth outlook for the region, again, we are expecting quite a varied pace in the recovery across the region. This really is the major theme for the outlook for 2021, a very uneven multi-speed recovery for Sub-Saharan Africa. And this does affect the way that multinationals approach the region. So we are expecting to see fairly weak recoveries in markets like South Africa, Zambia, Angola, especially when you compare it to the depth of the recessions forecasted for 2020. And these markets will also struggle to grow sort of meaningfully in 2021, in 2022. So quite sort of weak growth for those markets, whereas actually markets like Cameroon, Cote d'Ivoire, Kenya, the medium-sized markets, some of these have actually escaped recession altogether this year, or likely to escape recession this year, and will continue to grow at very rapid paces in 2021 and 2022. So quite a marked contrast between the larger markets and the medium and smaller markets across the region. This is quite a helpful way of getting a sense of when markets will return to their pre-pandemic levels. So, based on our growth assumptions for the region, we are expecting markets like South Africa, Angola, Zambia to take until 2023 at the earliest before they reach their 2019 levels of economic activity. So, quite a severe setback for some of these markets in terms of overall levels of demand. But markets like Kenya, Ghana, Cote d'Ivoire, again, the faster growing markets, we haven't seen a recession. We are unlikely to see a recession over the next couple of years, and these markets will post pretty significant growth going forward. So quite a marked difference in terms of the outlook. But it is always worth remembering that even though some of the really rapidly growing markets are, may look very attractive on paper, like Cote d'Ivoire, when you look at overall levels of GDP, South Africa, Nigeria, even though they are performing quite poorly, they really can't be ignored. So they still represent significant opportunity despite weak economic performance. So this does mean that multinationals, if they're looking to capture growth across the region, they need to focus on the smaller, fast-growing markets, but also they can't ignore the really important larger markets in Sub-Saharan Africa. Now, it's also worth looking at some of the sector performance outlooks for 2021. So, like the outlook for markets, we are expecting to see fairly sort of different trends when it comes to sectoral performance over the course of the year. What we are expecting to see, I'll focus on a couple of key sectors. For example, agriculture. It's one of the sectors that is actually, irrespective of what's been happening with COVID and the sort of global economic slump, we are seeing a sort of structural improvement or structural expansion in activity across Sub-Saharan Africa. And this is related to government support, investments in infrastructure, investments in programs to increase agricultural productivity across the region. And this has actually been reflected by the fact that in very few economies in Q2 did agriculture actually post contraction. I mean, a couple of markets like Nigeria, but that was because of domestic dynamics. But agriculture really is on the up across the region. Another sector that's worth noting is that the IT sector, ICT telecommunications sector has really been, it's been on the up for a very long time in Sub-Saharan Africa. but it has received a significant boost as a result of coronavirus. So, for example, in South Africa, we've seen a doubling of the number of people shopping online because of the closure of formal retail spaces. And so this is a very good example of how certain sectors that were already growing are increasingly being boosted by the coronavirus pandemic. I mean, it's also worth looking at the other side of the spectrum and seeing sectors that are being pushed into decline or will perform very poorly in 2021 as a result of the coronavirus pandemic. And those really focus on things like consumer luxury goods. You know, many consumers will still suffer through 2021 as a result of the fallout from the coronavirus pandemic. And we have seen consumers postpone non-essential purchases, premium consumer goods, for example. And we're also seeing sectors like the construction industry really struggle as a result of weaker investment, weaker foreign direct investment, and also as governments reprioritize funds away from infrastructure development, for example. So really quite varied dynamics when it comes to sectoral performance across the region. So looking at the demand outlook, beginning with the public sector opportunity for multinationals. Although we are expecting to see an overall improvement in demand dynamics from the public sector in Sub-Saharan Africa in 2021, it's probably one of the most fragmented and polarized in terms of the pace of the recovery across the region. Now, we are expecting most governments, as we mentioned, to face significant fiscal pressures through 2021 as a result of rising debt dynamics. But given the pace of the recoveries next year, most governments will be able to increase spending as their fiscal position stabilize somewhat in 2021. But there are a couple of markets that will continue to see quite significant contractions in spending. So Nigeria, Ghana, and Angola are all worth noting for their fiscal weakness over the course of 2021. So much weaker public sector opportunities in those markets. Ghana is seeing an election this year with very weak public finances, which means that the government will be forced to cut spending next year. And Nigeria and Angola are both suffering as a result of the loss of oil revenues. But we are seeing, pretty significant growth in South Africa from a public spending perspective.
Yes, Matt, can you actually elaborate a bit more on South Africa? It seems like the growth in government spending is quite low, but of course, when we think about the size of the market, it seems quite high on that vertical axis of additional government spending taking place in 2021. Yes. Is that a major opportunity to go after? What's happening there?
Yeah, so I mean, South Africa really does stand out, as you say. Yeah, so although the overall growth rate is quite low, the additional spend is quite large, and this partly reflects the fact that the South African government's budget is already significantly larger than all other Sub-Saharan African markets. So any additional spend will be a lot larger. But I would say that the picture is quite nuanced again for South Africa. The increase in government spending in 2021 will really focus on healthcare, social care, and to an extent education. They're going to see, this will push up spending in real terms for the entire budget, but we are going to see higher debt servicing costs, and the government is likely to cut procurement budgets across all sectors, or all departments, excluding education, healthcare, and social care. And so this means that this increase that you see here for South Africa is very much skewed towards a narrow set of government departments. So this doesn't represent broad-based opportunity for multinationals in 2021. Looking at the B2B demand outlook, and we use investment levels as a proxy for the B2B demand outlook in Sub-Saharan Africa. So generally a bit more of an even and a slightly more upbeat picture when it comes to the outlook for investment levels in Sub-Saharan Africa. So although we are expecting to see public sector investment come under a bit of pressure in 2021, for most countries, the private sector will post pretty healthy rebounds when it comes to investment levels. I would point out one exception here, or two exceptions. One is Nigeria. This really reflects the structural decline in the oil sector in Nigeria. So The oil sector has been one of the largest recipients of investment for a number of years, and a result of weak global oil prices and also very poor domestic oil dynamics. The sector will see very weak investment levels, and this will drag down overall levels of investment in Nigeria. But this doesn't necessarily mean that all sectors will face the same decline. And another market that's worth pointing out is Mozambique, a very significant outlier in terms of investment levels. This really reflects significant investment into the gas sector in Mozambique. So there are multi-billion-dollar gas projects that are proceeding in 2021, and this will be particularly transformative for the economy and result in a significant increase in investment. But overall, fairly upbeat view for most markets from a B2B perspective. And finally, from a consumer perspective, again, a much healthier year for consumers in 2021 compared to 2020. Although the additional spend for most markets does look comparatively small, in terms of growth rates, we are expecting most markets to return to their pre-pandemic levels when it comes to consumer spending. Countries like Kenya, Cote d'Ivoire, Ethiopia, those are all markets that will see increasingly supportive conditions for consumers, for example, much lower inflation, upbeat hiring from a private sector perspective, and that's also going to be happening in Ghana. So these markets really are going to be driven by healthy underlying fundamentals for consumers. But in South Africa, again, the bounce back, a bit like with government spending, the bounce back really is not very even. So this really will be focused on slightly more premium consumers. And also this represents growth of 4% following a contraction of nearly 10% in consumer spending in 2020. So this really does need to be put into perspective for the next year. But overall, a fairly upbeat picture for consumers across the region.
Thank you, Matt. And I guess it's time to take a look at the operating conditions as well. Demand is always very important, but to be able to access this demand, there's quite a lot that we still need to take into consideration around the operating conditions. But before we move on to that, I would like to remind all of our listeners that you can all, throughout the webinar, submit your questions in the Q&A box on the right side of the webinar platform. We'll be happy to try to take them at the end of the session, or definitely follow up by email to any of the questions that you may have. So with that, Matt, I'll turn it over back to you to walk us through the operating conditions.
That's great. Thanks very much, Zainab. Yes, so now that we've seen the outlook for demand in 2021, it's worth taking a look at how multinationals are going to be affected by domestic operating conditions. So we all know that Sub-Saharan Africa does present its challenges, and different regions of Sub-Saharan Africa present a different set of challenges. And the main takeaway really is that we are expecting the region to still offer a number of significant difficulties when it comes to operating in the region, but there are some dynamics that will be improving for multinationals and their local partners going forward. So I thought we'd begin with one of the most pressing issues for companies in the region, and that relates to currency issues. So the global pandemic and the economic slump has seen emerging market currency volatility really become quite aggravated over the last 6 months or so. You can see on the chart on the left-hand side, the columns in yellow or orange represent the percentage depreciation of some of the leading currencies in Sub-Saharan Africa. Now we've seen Angola lose more than half of its value, the Kwanza lose more than half of its value. The birr in Ethiopia and the kwacha in Zambia have been forced downwards as well. In Zambia's case, it's partly related to the country's default this year, as investors have become increasingly worried about the market. And South Africa, you can also experience quite significant volatility, and this is because the currency is one of the most open in the world, the most highly traded emerging market currencies. And so this has presented significant difficulties for multinationals in terms of managing currency risk. It's put local partners under pressure. They face increasing risk of exchange rate losses. And so this has presented, pretty significant challenges for business continuity in some cases. Looking to 2021, the story is a bit more upbeat in terms of, or a bit more positive in terms of the outlook for currency volatility. We're not expecting to see the double-digit volatility across most markets that we did see in 2020. Most economies, because they will be growing a lot faster in 2021, and the global economy is expected to settle a bit. We're not expecting to see volatility, but there is still risk in certain markets, say, DRC, Nigeria, Angola, because these countries are still adjusting to a significant loss of export revenues from their primary commodities. One currency that I would note that's actually sort of outperforming most currencies in the world is the CFA franc, and that is because this is the currency used by francophone markets in West Africa, Central and West Africa, and those markets will continue to benefit from the CFA franc's peg to the euro. We're not expecting the CFA franc to be replaced by the new eco currency anytime soon. So this means that multinationals will continue to benefit from currency stability in those markets for the foreseeable future.
I guess, Matt, at the other end of the spectrum from CFA franc is basically Nigeria. We continuously hear about FX challenges in that market. Can you give us a quick update on the currency there?
Yeah, so Nigeria is a bit of a conundrum for most multinationals and investors in the market. So we have seen significant downward pressure on the naira as a result of the slump in oil prices and the loss of FX revenues. And this has forced the government into a sort of, you could argue, a half-baked set of reforms. So it has allowed the naira to depreciate at the official rate against the dollar, but it hasn't allowed the NAFEX, which is the investors and exporters window, to depreciate meaningfully. And this is a bit of a problem for multinationals, because most multinationals and their local partners were accessing currency through this NAFEX window. Now, what we've seen is currency shortages, foreign currency shortages have worsened quite significantly over the last few months as the government tries to sustain the value of the naira. And what we're seeing is most multinationals and their local partners are being forced to access currency through the parallel market, which is a lot lower than the official rate that we have forecast here. In terms of the outlook, so we expect this to remain the status quo for the foreseeable future. And this is because the president is really quite set on protecting the value of the naira, even if it means that foreign currency shortages continue. We could see further depreciations of the naira, but it won't really result in a significant improvement in access to foreign currency. So this will remain a challenge for the foreseeable future. So FX complications in Nigeria are probably here to stay in 2021. Looking to the monetary landscape, there are a couple of interesting trends that we're expecting to see in 2021 when it comes to access to credit, borrowing costs. So we have seen interest rates fall quite significantly across the region. In some markets, we've seen record low interest rates. For example, in South Africa, the South African Reserve Bank cut its interest rate to around about 3.75% over the last few months. The Ghanaian Central Bank, Nigeria, Angola, they've all cut their rates in order to stimulate the economies to improve access to credit across their markets. But actually what we've seen in practice is barely any change to the affordability of credit in the private sector. So the affordability of credit or access to affordable credit from commercial banks to the private sector. We have seen a small decrease in countries like Nigeria because of the scale of the cuts to the central bank's rates. In Ghana, we've also seen a reduction. But the reality is that difficulties accessing credit, especially for local partners and for some customers, small and medium enterprises, some consumers, access to credit is unlikely to improve meaningfully through 2021. And we could actually see interest rates increase again as economies begin to pick up and inflation begins to rise. So we could actually see borrowing costs begin to rise over the course of next year. This could present a bit of a challenge for multinationals and also their local partners looking to borrow to cover difficulties when it comes to weak demand, for example. One of the major drivers of the price environment, and this is particularly important for consumer-facing companies, is food price inflation. Although we haven't seen a major spike in food price inflation this year, we have seen upward pressure on food prices. And this does contribute to overall higher levels of inflation. This does obviously affect monetary policy and interest rate decisions, but it also means that consumers, especially middle and lower income consumers, are facing increasingly squeezed disposable incomes. And this is contributing to weaker demand for, say, premium consumer goods. And this has an effect as well, obviously, on B2B companies that are selling these or contributing to the production of these products. So fairly high price pressure for consumers, and this is reflected in inflation rates across the region. So significant currency depreciation this year, difficulties with agriculture in some markets such as Nigeria, and restrictive trade practices have all driven up the price of inflation in 2020, or the rate of inflation in 2020. We are expecting to see inflation ease slightly in 2021, but double-digit inflation will not disappear in markets like Nigeria, Ethiopia, Angola. So companies will continue to have to walk a tightrope between, try to balance on a tightrope between increasing prices, but at the risk of losing market share, or keeping their prices low to protect their market share. So this is definitely going to be a difficulty for multinationals looking ahead. Again, for the Francophone markets, very stable currency dynamics will contribute to very low inflation. So this really will be an exception to the trend in 2021. In terms of the security and political landscape in Sub-Saharan Africa, it can't be ignored in terms of the impact for most multinationals. So although it's worth noting that most multinationals won't be directly affected by political instability and security challenges across the region. And this is because mostly, it's a generalization, but most markets will remain affected by political tensions in rural areas, and insecurity as well will affect rural areas. But it does contribute to investor worries, and it also does mean that there's increasing risk of supply chain disruption, route to market disruption, and also difficulties around predicting government regulations and which direction they're going to go in over the course of the year. So we are expecting to see heightened political risk over the course of 2021, and there are a couple of markets that are worth noting. So over the last few days, we've seen a very fraught election marred by some violence in Côte d'Ivoire. Depending on how the count goes and whether the election result is challenged by the opposition, we could see a protracted period of civil unrest in the market. Although we don't expect a return to civil war, it's definitely worth monitoring. We could see a long period, in terms of months of disruptive protests that could affect businesses. But by and large, we don't expect that to last well beyond the end of 2021. Nigeria, insecurity in rural northeastern parts of the country will be aggravated by extremist activity across the Sahel, so definitely worth monitoring. And there's also increasing concern around sort of extremist activity, terrorist activity in the northeast of Mozambique that could spill over to affect Kenya and Tanzania. Again, this won't affect most companies in Mozambique, but the risk is really to the country's growth outlook, which could affect other companies operating in cities like Beira and Maputo. In terms of the outlook for Ethiopia, so we don't expect the country to unravel or enter a state of generalized unrest or civil conflict, but there is increasing risk that some of the regions of Ethiopia will agitate for increased independence or autonomy from the central government in Addis Ababa. And so this could mean that doing business in rural areas of Ethiopia will become more difficult over the course of next year. So definitely worth monitoring political dynamics across the region, working with your local partners to track outbreaks of unrest and political developments. Another major driver of the outlook for the operating environment in Sub-Saharan Africa is a long-standing trend of localization. So we've seen governments push the pause button when it comes to aggressive localization policies during the coronavirus pandemic, because policy priorities have been focused on the impact of the COVID pandemic and the economic slowdown. But it's worth remembering that governments will revisit and restart these localization protectionist policies, you could say, over the course of 2021 and over the next couple of years. A couple of markets worth noting. Nigeria continues to maintain quite protectionist FX and import restrictions. We've seen an increase or an introduction of new food import restrictions over the last few months. Kenya wants to increase manufacturing, local content in manufacturing, and Ethiopia is offering tax reductions for new manufacturers as well. So although this does represent sort of increased pressure for multinationals importing products into the market, it actually represents an opportunity for companies looking to localize manufacturing, or if they are looking to supply local manufacturers, so B2B companies looking to supply components to companies in the market. So a bit of a mixed outlook when it comes to localization policy. Some silver lining there, you could say, for 2021.
Well, thank you very much, Matt, for this very thorough outlook on the Sub-Saharan Africa region. Clearly, the complex operating dynamics are here to stay with us in many of the markets, and at the same time, the outlook for demand recovery is quite varied across these countries. We see some countries in much deeper recession, like South Africa, but some countries performing relatively better than regional averages. And clearly, to be able to manage this varied pace of recovery, we need to take a very nuanced portfolio approach to this region. So why don't we take a very quick look at some of the sub-regions? Would you like to walk us through the high-level key takeaways on the sub-regions of Sub-Saharan Africa?
Yes, certainly. So, I mean, I'll jump straight in and have a look at Southern Africa. It is really worth, as you say, Zainab, having a bit of a nuanced view when it comes to looking at the different sub-regions in the region in Sub-Saharan Africa, because the performance dynamics, demand dynamics through 2021 are going to be very different across SSA. Beginning with Southern Africa, so it really represents probably the weakest region or sub-region across Sub-Saharan Africa. And this is because all of the major economies across Southern Africa are likely to underperform through 2022. One exception, obviously, is Mozambique as a result of the very rapid increase in investments in gas in the northeast of the country. But certain markets like South Africa, won't reach its pre-pandemic levels of economic activity until 2023 at the earliest. And we are expecting increasingly populist interventionist policies to make progress in South Africa. So, for example, issues around state-owned enterprises in the market aren't really going to be resolved in 2021, and it will continue to drag on growth over the next couple of years. In markets like Angola, the economy is really struggling to shake off the effects of very weak oil revenues through 2021, 2022. The government is trying to push ahead with a bit of a privatization program, but really it will struggle to make progress. And then Zambia is also really contending with the fallout from its default in 2021. So quite a challenging outlook for Southern Africa in 2021. So turning to West Africa, it's really, you could say, a bit of a microcosm of Sub-Saharan Africa, because the region will perform at quite a varied pace throughout the next couple of years. So the largest market in the region, Nigeria, really going to be struggling over the next couple of years with a gradual recovery in economic performance through the mid-2020s. But we are expecting to see Senegal, Cote d'Ivoire, and Ghana really race ahead of the regional average to perform pretty well over the next couple of years. Countries like Cote d'Ivoire and Ghana have all benefited from significant business reforms increasingly diverse exports, fairly healthy public sector debt dynamics, although Ghana is an exception to that. And so all of these factors really do set these markets up for success, and also fairly broad-based demand dynamics or improvements in demand dynamics through 2021. It is obviously worth noting some of the risks to the outlook. One, for example, is Cameroon's low-level civil war that's going on. Definitely something to monitor. We don't expect it to improve significantly, especially in this environment of increasing political repression. And there's also, again, it's really worth noting the risk of new forex restrictions being introduced in Nigeria over the course of the next year or so. We could see FX access get worse before it gets better. So definitely something to monitor. In terms of the outlook for East Africa, so quite a different picture to the other regions, generally quite an upbeat one, in fact. So we are expecting to see all major markets across East Africa post quite healthy growth in 2021, and this will be sustained in 2022. Most markets are going to benefit from an improvement in manufacturing, deeper integration as a result of the East African community. But we are definitely monitoring a couple of risks. So as we mentioned earlier, increasing concerns around civil and political tensions in Ethiopia. There's also an ongoing problem with militant activity in the DRC, which can affect commercial activity in markets like Uganda, South Sudan, and Rwanda. They're always worth monitoring because this can deteriorate at quite short notice. And the other major issue or point of concern for East Africa is the debt dynamics or public sector finances in Kenya. So although we don't expect a default next year or debt distress next year, there is increasing concern that a rising budget deficit in Kenya could drive greater volatility of the shilling. So that's worth monitoring over the course of the year as well.
Perfect. Well, thank you very much, Matt, for this overview. As a reminder to all of our clients, we can talk in a lot more depth with you on one-on-one basis about any of the markets that are your priorities across these three sub-regions. So feel free to reach out to your client relationships director or your client services managers to schedule any additional deep dives on any of these markets. And a reminder that we are still taking questions at the right box and in your platform that you can see here. Just basically reach out to Dr. Frontier Webinars or the question box on the right. And I think with that, we can conclude, Matt, with some of the implications of this entire outlook on multinationals for 2021.
That's great, thanks. So I'm not going to go into a huge amount of detail on each of these implications, but there are 5 major areas that companies should focus on in 2021 to get the most out of the region. So the first is looking at market dynamics. Because we're going to be seeing a multi-speed recovery across the region, companies will need to think about where they will be allocating resources or whether they can reallocate resources or shift resources between markets, away from weaker markets and towards faster markets to ensure return on investment. Obviously, this is a difficult conversation or difficult decision to make, but it's worth considering in light of the sharply diverging growth dynamics across the region. The other is looking at your product portfolio, so considering whether your products are best placed to capture rising demand across the region, a bounce back in demand, but also the fact that many customers will remain price sensitive. Demand for sort of more premium goods could be a bit weaker through 2021 as the fallout from COVID continues. So definitely worth considering your product portfolio next year. Looking at your channel dynamics, so we are expecting to see an improvement in conditions for channel next year, but thinking about how to monitor for sudden route to market disruptions, but also increasing pressure around currency volatility, issues about, around access to foreign currency in certain markets, but also whether your channel has the capabilities to sell to more price sensitive consumers, but also, for example, the public sector or governments who have much tighter budgets who will have much tighter budgets over the next couple of years compared to 2019. So thinking about their sales capabilities. Also looking at issues around payments. So, as we mentioned several times, access to foreign currency is a bit of a challenge in some markets. FX volatility will continue over the course of 2021. This does present ongoing risks when it comes to payments from local partners, but also puts increasing pressure on companies importing products and whether they should pass those increased costs onto their final customers. And so this relates to the final point on pricing. So definitely thinking about whether your pricing cadence or the review of your pricing decisions across the region and between different countries is still appropriate, and whether an increase in prices or a change in prices will result in a loss of market share or margin. So a few things to think about for 2021 as the economy begins to recover.
Mm-hmm. Well, thank you, Matt, for this very thorough outlook, and actually thank you for all of our attendees, our listeners for hearing our outlook on the region, but also submitting a lot of questions. We will make sure to respond to all of them by email. We have received quite a few, so thank you very much for all of that. And as I've mentioned, for our clients, please reach out to your client services manager for additional details and support that you might need over the course of the next few weeks. And I think we have only time for one question to take at this point. I've picked the one on South Africa since it's one of the larger markets in the region, and I think a lot of our listeners would be interested in this. Matt, what are the assumptions that you're taking around Eskom and power shortages, and also the land reform, the land redistribution process that was kind of taking place? As we look into next year, how are these drivers affecting the outlook for South Africa?
Yeah, so really, actually, those are really interesting questions because there's been a lot of media coverage around that. So in summary, in short, we expect there to be some progress when it comes to the reform of state-owned enterprises, a little bit more than last year, or 2020, but not very much progress overall. We don't expect Eskom to suddenly become a very efficient power utility. So we are expecting load shedding, rolling blackouts to continue over the course of 2021, and there will be a lot of political resistance to meaningful structural reform of Eskom, especially when it comes to reducing the wage bill and improving efficiency and improving output from its power plant. So significant challenges for Eskom in 2021. We are expecting increasingly, however, an opening up of the energy sector in South Africa, so greater scope for companies to generate electricity privately or local municipalities to do the same. In terms of the outlook for land expropriation, so we don't expect the government to launch into a Zimbabwean-style land grab. The government is very aware of the fact that it will rattle investors, but we could see increasing investor concern when expropriation starts to happen. We don't expect it to be an uncontrolled process. It probably will be adjudicated by the local courts in South Africa, but once it begins, it will be monitored very closely, and depending on the pace of expropriations, there could be increased land volatility as investors do become a bit more concerned. So we will be monitoring these very closely.
Okay, thank you, Matt, and thank you everyone on the line. We've, I think, neared the time limit for today's webinar. Everyone will also be receiving the recording of this webinar and the presentation deck within the next 24 hours, so I wanted to remind our listeners of that. You can view these webinar materials and also much more on our new mobile app, which I've mentioned, which is available for download right now on iOS or Android. So for complimentary access to our suite of resources, including data, dashboard tools, and market monitoring reports, please do email us at info@darkerfrontier.com, and a member of our team will be in touch. So thank you very much, everyone on the line, for joining us. We do look forward to speaking with you again soon. Have a good rest of your day.
Thank you for your time today. Goodbye.